This trade looks simple on the chart, but the reason it works out comes down to reading market structure, understanding supply and demand, and being able to read price action for the perfect entry execution. In this video, I'll break down my entry, my exits, and the risk mitigation tactics I took in this backtesting example. My name is Vi. I've been only trading for a few years, and I'm still chasing profitability, but I'm creating these videos as I learn my own strategy that's helping me become more consistent and eventually profitable in the future. I hope these videos help you on your journey, no matter where you are. With that said, let's jump into the video. All right, we're going to start on the 15-minute, since that's where we establish our market structure. We're going to remove these markups for now, and we're going to rewind back to the start of New York session, which is at 8 a.m. So we'll just advance one candle, and we can see that we're bearish on the day, right? We have our lower low, a higher high, and then a lower low. And again, we're kind of stepping down into this zone, and this is our trading zone for the day. We care about what's happening inside of the zone unless we get a break of structure, or in this case, a change of character to the upside. And so as we start the day, we are observing that we have a portion of an old supply zone remaining, right? We have this big supply zone that was created when price broke structure to the downside. Orders originated here and aggressively moved down, leaving this displacement or fair value gap a telltale sign of a supply zone. So we have that, but we can see that London session has happened before we ever woke up, and this part of the supply zone remains. And so now we're interested in price coming back into this zone, collecting any remaining orders, showing us that there is seller pressure there so that we can target this low as a profit target destination. Right? So outside of that context, we need to be aware of news. So we see that there is 8:30 news happening, red folder event. So we definitely want that news to pass before we enter a trade. And so we'll advance forward. That is the news event, which actually brings us into the zone, which is great. We want to drop down to the 1 minute at this point to observe price action. And we basically are looking for the same kind of principle of supply and demand, except on a fractal scale. What we see here is that we have a demand zone that has pushed price up aggressively into our area of interest. And so we want to make sure that we see price break below this level before entering any trades, because this would tell us that there are enough sellers in there to overpower the buyers that are present in this area. And that is our entry confirmation. So on the 1 minute, we'll advance forward. It's interesting to read candlesticks at this point too, because you can see that we have an engulfing candle here. We have a candle that saw a very aggressive wick away, which makes sense, right? Because we know that there are buyers in this area because they pushed so aggressively. So by seeing this rejection wick, it tells us that there's some buyers still there, but are there enough to push us past this point and say that there are more buyers than sellers? Until we get a clear story, we don't make a move. So at this point, we're still observing buyers are coming in, but can they take over? No, we got some engulfing candles here on the seller side. Sellers are stepping back in. Buyers come in, sellers recounter, they engulf again. So we have a lot of selling pressure here. But again, we don't care until this mark is broken. And so we continue playing this out. We finally get an aggressive displacement, and I'm just going to rewind back. An aggressive displacement of this line that we were marking up, and that is our entry signal. We know at this point that, okay, we have an entry. So what we're going to do is very quickly try to find an entry point on this candle. What we can look for is on the 3 minute, you see that we do invert this bullish fair value gap. So I'm looking at that as an option here. I want to place my entry there, and I want to place my stops a little bit above this area. And for targets, which is frankly the most important thing, setting realistic targets has helped me a lot in my back testing. I want to look at the 5 minute to see what I can find. And so automatically, I'm going to take this card off. Automatically, I can see that we have this session low as a key point of liquidity. We would also have this low here if we were to reverse back as a point of liquidity to take, right? We're looking for internal points of liquidity. And we ultimately have this session low as well here, and we can drag our drop down, and that's 2.5R, which frankly is fine. But if you wanted to target higher, what you can do is drop a time frame higher and look to the left to see if there's any other lows to take. We do see a low here that has already been taken, but there's another low all the way down here right before this big fair value gap where you could see activity. This could be another area to target. Let's just put it in there for now. Let's just see what happens here. And the trick here is something I'll show you in a bit in terms of retaining profits while taking risk off the table. So now that we have 4 different take profit areas on our chart here, we can now play out the trade. Let's put 1% of risk on the table here. Let that trade come in. Just going to move over a little bit. We immediately get tagged in. Okay, we get immediately tagged in, and we immediately pass our first take profit target area. Okay, so at this point, you can take percentage off if you want to keep and wait till this mark is taken. You can. I'm a very conservative trader. I'll admit this freely. Let me just make this a little easier to read on the 5-minute. I'm a very conservative trader, so at this point, I'm taking money off the table because I want to keep money in my pocket. So I take 50% there, and then I can play this out again. We get tagged into the drawdown a little bit. Continues to play out for us. Sellers come in again, right? Sellers are continuing to pressure, and they push back again. And this time with aggression. We've slammed through the second take profit. So we're going to take that off, and frankly, I would take more profit off the table, another 50% of what's remaining. And we finally continue down. If I advance this further, we're slowly making progress, and we actually end up hitting our ultimate take profit in one go. I wasn't even able to take off more, dollars off the table. And that's how we took profits off while maintaining the risk exposure here in this example. And so right off the bat, that results in a 3.6 bar trade, meaning if you risked $100, you just made $361. And that's, a solid trade that includes us reading market structure, identifying valid supply and demand zones, and reading price action in a way that validates our execution, our entry execution. If you found this video helpful, be sure to subscribe and share. And if you're interested in seeing more videos like this, where I go over trades and go through my strategy step by step, then check out this video right here, and I'll see you there.